RPG Lifesciences, that's a stock that is in focus today. They reported their numbers. When you're looking at it in terms of numbers, revenue saw growth of 7%. Margins have seen an expansion as well. But to talk more about their numbers, what should we be expecting from the company going forward? We do have the Managing Director at RPG Lifesciences joining in with us, Yugal Sikri. Thank you so much, sir, for joining in with us this morning on ET Now. I want to start by talking about your domestic formulation side that accounts to almost 67% of your sales. What is contributing to this growth that we've seen in the segment? And going forward, how do you see the mix changing and the breakup for domestic as well as the international formulation side in terms of sales?
First of all, thank you so much for having me on your show. Just a couple of sentences on the overall performance, then I'll come to the domestic formulation very quickly. I think it's been a remarkable year for RPG Life Sciences. We have, for the 5th consecutive year, we have retained an upward trajectory on sales and every single profitability ratios, whether it's working capital management, cash flow generation, and very importantly, you talked about domestic formulation business, which makes up 67% of our turnover, registered one of the fastest growth. We have been 7th fastest growing company in the domestic arena amongst the top 75 companies of the pharmaceutical industry. Very importantly, the growth, which is almost flattish for the industry, our volume growth was about 13%. 13% has been the volume growth. Now, this has been driven by a number of measures, a number of pillars I talk about. Product portfolio rejuvenation, new products are contributing almost about 30% of the sales. Our strategic brand, textbook iconic brands have been rejuvenated by life cycle management strategy. We have a brand called Neprosin. I talked about it earlier that we are working toward reaching it to 100 crore. We achieved a great milestone. We grew 20% plus. Market share went up. We touched around 73 crore plus or so. We talked about immunosuppressant basket, which will take it to 100 crore. A great milestone has been achieved in the domestic formulation business, where we have reached over 70 crore now. Growth 16% or so. Product portfolio rejuvenation working very, very well. We have productivity improvement plan. Productivity has moved to close to about 6 lakhs now. It used to be about 3 lakhs or so about 5 years back by a number of productivity improvement measures. Third, our customer coverage has expanded significantly in our all customer segment. We cover close to about 90% of our targeted customer segment. And lastly, the efficiency enhancement, org structure optimization, both back end and the front end, I think has contributed to significant improvement in the margins. I feel very good to share with you that in the last 5 years, we have done over 1,000 basis points increase, and margins have been up consistently year after year. And this year, margins have touched close to about 23.3%. The growths have been significant. We have 26% growth in EBITDA, 29% growth in PBT, and close to about 28% growth in the PAT. The cash, which is there in our books, we are working towards utilizing those cash, both for the capacity expansion of our which intent to use for export, as well as we have kept the cash for our inorganic way of growing the business.
Right, absolutely. Very good morning to you, Mr. Sikri. This is Cheryl also joining in the conversation. You did touch upon your margin, and yes, it's been very consistent when you look at the rise year on year on a year-on-year basis for your margins. But do you think this uptrend will continue going ahead, given the fact that we are seeing geopolitical tensions? There's also inflationary pressure across the world. So do you think that you will be able to sustain this margin uptrend on a quarter-on-quarter basis as well, and also on a year-on-year basis when you talk about it?
Yeah, when we talk about margin improvement, I consistently mention that our margin improvement story has been a structural story, which means we have done some basic fundamental interventions in our operations, because of which our margins are consistently going up. Just to exemplify, org structure optimization, at the back end yield improvement, in the field force case, the P&L leakages like expiries, etc., reduction, which have almost reached the industry best standards. Those measures will continue. Now, when we add to the revenue, I think to a great extent, the revenue increase and the gross margin increase, which we'll get, will flow down to the EBITDA and the PBT and PAT. Therefore, I expect the margin improvement trajectory to continue, albeit not at the same slope which we have seen. It's going to go a little obtuse, but our attempt is to make sure that our profitability improvement trajectory continues unabated.
Right, and I just want to talk a bit about the European side of the business as well. How is that performing? Are you seeing any concerns there? What's the outlook there?
You're talking about the international side?
Yeah, the European
Okay.
business
Yeah.
and the European performance, specifically that area.
Okay. Your performance, it's been, despite all the geopolitical tensions which we hear, our business has registered a very positive growth. We have UK as our market. We are also exporting to Germany. We are also exporting to France, also exporting to Canada. And these are our major contributors to our business, frankly speaking. The 15% growth which you have seen in the international formulation business is largely coming from the developed markets and the names of the markets I just illustrated. So despite the geopolitical tension, yes, we are also getting impacted. But as I mentioned, the structural part is contributing to the margin improvement, and new markets, new products, new customers is contributing towards the revenue improvement.
You did speak about the cash on books and how you're planning to utilize it. If you could touch upon that once again, and as well as since we are now in a brand new financial year, any outlook that you can leave us with?
Okay. Yes, we have close to about 127 crore cash in our books at the moment, with a good amount of cash flow generation, which is going on for the last 5 years. We have used those funds. We are planning to use those funds in two ways. One is we want to increase our or substantially increase our export business. Therefore, we are investing in our plant modernization. Close to about 140 crore has been spent already. This year, we should be able to close our expansion part, both of formulation and API plant. And second is M&A. We are also looking at very actively, frankly speaking, we are looking at the M&A opportunity both in the brands or the company, in both the segment, formulations as well as the API segment. So that's how we intend to use our cash in our books for our business expansion going forward. Now, you talked about going forward, what's our guidance? Generally, as a policy, I don't give guidance, but I definitely state that our next goal is to reach 1,000 crore, and the entire organization, the processes and the product pipeline, whether domestic or international, I think is being targeted towards reaching to that milestone ASAP. We want to continue to register growth faster than the market so that we keep on continue to increase our ranks in the market. We have seen 5 ranks going up last year in the pharmaceutical market. So that's our plan.
All right, then we leave it there. Mr. Sikri, all the best for the future for RPG Life Sciences. Definitely the company has performed well over the course of the years, and I hope that, like you've actually alluded, a lot of confidence in the way forward. I hope the company also performs that way. Thank you so much for joining us on ET Now to give us a glimpse of your earnings and the way forward. That was the management of RPG Life Sciences. But
if you like this video, then like, share and subscribe to ET Now.